Hello traders, you are welcome to this video and you are welcome back to the Forex Geek channel. Okay, in this video we are going to be looking at the Forex Divergence strategy. Okay, now this strategy can help you to spot powerful entry points even in unpredictable market conditions. So if you are looking to level up your trading skills, then you might want to stick around. Okay, let us start by understanding the basics. What exactly is divergence in Forex trading? Now, divergence is a powerful technical indicator that occurs when the price of an asset moves in one direction, while a technical indicator like the MACD or the RSI moves in the opposite direction. So I am going to be adding both the RSI and the MACD on the chart as we look into the divergence strategy. All right. Okay, so here we go. We have the RSI here. We have the MACD here. Okay. Now think of divergence as a warning signal from the market. When you see divergence, it means there is an imbalance between the price movement and market momentum, potentially giving you insight into what might happen next. So when you have price moving in one direction, you have the indicator moving in the opposite direction. This discrepancy can signal that the current trend might be weakening or reversing, making it an excellent moment to consider entering or exiting a trade. Okay, so why should you care about divergence in Forex trading? Well, divergence helps traders to see beyond the price action and understand underlying market strength or weakness. Unlike other strategies that focus only on price, divergence allows you to read between the lines. Okay, this can help you make more informed decisions by showing you when a trend might be losing steam or ready to reverse. Okay, so one of the main reasons traders rely on the divergence strategy is because it can signal early trend changes. By spotting divergence, you can find strong entry points before the rest of the market catches on. In other words, divergence can give you a bit of an edge, helping you time your entries and exits more effectively. Okay, so now the RSI and the MACD are two popular indicators that are used for spotting divergence. All right. The RSI itself measures the speed and change of price movements, which makes it perfect for identifying potential reversals. When the RSI doesn't align with price movements, that's a clue there might be a divergence. For instance, if the price is making higher highs, let us just look for a very good example. All right. Let's see if we can find a very good example. Okay. Okay, so we can see an example here. When the price makes higher highs, but the indicator makes lower highs. Can we see this? You can see there was higher high here, there was lower high here, and you can see same thing happened on the MACD as well. So in this situation, the indicators are telling you that this bullish momentum is losing steam. All right. So it shows that there could be a very serious bearish reversal upcoming. Okay. So we can see that just shortly afterwards, after the price made higher high, but the indicator made lower high, you can see both the RSI and MACD made lower highs. Shortly afterwards, we had a decline in price. Okay. So we can see that that is what the divergence does. Divergence reveals to you that a bearish reversal can be upcoming or a bullish reversal. For a bearish reversal, you call it a bearish divergence. Okay. But in the case whereby we had price making lower highs, we had price making higher lows, lower lows, sorry, we had price making lower lows, right, lower lows, but then we had the indicators making higher lows. In that situation, it's going to be a bullish divergence. Okay, this bearish regular divergence, and that's going to be a bullish regular divergence. Okay, so it's important for you to note that when you spot a divergence, it's just an indication that that trend is losing steam. Now, it's possible that the reversal might not happen. Okay, because no strategy is foolproof. but it's just a proof that the momentum, in this case, the bullish momentum is losing steam and a bearish reversal could be imminent. Okay, the MACD is a trend following indicator, and it shows you the relationship between two moving averages of an asset's price. So when the MACD line diverges from the price action, it can also signal a potential trend reversal. Hence, you see the reason why both the RSI and MACD are good indicators for spotting divergences. Okay, so just like the RSI, if you spot a bullish or bearish divergence on the MACD, it could be time to take action. So in this situation, once we have spotted the divergence, all right, you can enter a trade, a sell trade, because it's a bearish divergence, right? You can enter a sell trade after your reversal has been confirmed. Now, how do you confirm the reversal? You can look out for bearish candlestick patterns, and also it's important that you set support and resistance zones. This can help you to confirm your reversals as well, because as you can see, when price got towards this resistance zone, resistance are also points of reversals. Okay, so as price got to this resistance zone, it's a confirmation that we could even see a reversal, coupled with the fact that we had a divergence signal. So that is a good confirmation. Okay, so we had a little bit of a consolidation around here, and just shortly afterwards, you can see this bearish engulfing pattern that swallowed up the previous small bull candle. So we would have entered a sell just right after that engulfing pattern, and then stop loss could have been right above this resistance level, and then take profit can be just at the nearest support level, and then that is it. You are good to go. Okay, however, it's important to also know that we have two main types of divergence in forex trading. Okay, we have regular divergence and we have hidden divergence. This example that I showed is regular divergence. All right, each type offers different insights into the markets and can be used in different situations. So just for a quick description, regular divergence occurs when the price and indicator are moving in opposite directions and usually signals a trend reversal. For example, if the price is making higher high, like what we identified here, while the indicator is making a lower high, okay, this is a bearish regular divergence. On the other hand, if the price makes a lower low, while the indicator makes a higher low, this is a bullish regular divergence. So traders often look for these signals to prepare for a change in direction. However, we also have hidden divergence. Hidden divergence can be a bit more subtle, but it is equally powerful. All right, hidden divergence happens within a trend, and it's usually a signal of trend continuation. So while regular divergence signals reversal, hidden divergence signals continuation. So if you are in an uptrend and you see the price making higher lows while the indicator is making lower lows, okay, so note the difference. If you are in an uptrend and you see price making higher lows while the indicator is making lower lows, this is a bullish hidden divergence. All right, it's a bullish hidden divergence. So hidden divergence essentially tells us that the trend is likely to keep going, which can be helpful for planning trade entries during pullbacks. So both types of divergence are useful depending on your trading strategy and the current market environment. All right, regular divergence is more common at reversal points, while hidden divergence is a good confirmation in trending markets. So now that we know what divergence is and what types to look for, let's talk about how you can use the Forex divergence strategy in your own trading. So first up, you need to identify the trend. All right, like in this situation, we identified that this was a bullish trend. Okay, so you will have to know whether the market is even trending or ranging. This will help you decide whether to look for regular divergence, which signals reversals, or hidden divergence, which suggests trend continuation. Okay, so this context is important because using the right type of divergence at the right time is key to success. Okay, now secondly, you will need to add indicators. Okay, you add the RSI or the MACD indicator to your chart, just like we did here. You can decide to use just one of them. You don't necessarily need to add both indicators. Okay, but you can even add both if you want extra confirmation. All right, so you will use these indicators to find points where price action diverges from market momentum. Remember, different indicators can provide slightly different perspectives, so it's helpful to experiment and find what works best for you. All right, now you look closely at the price action and indicator to spot divergence. Are they moving in opposite directions like what we had here? All right, is it regular or hidden divergence? Take your time to analyze the chart and make sure you are seeing a clear signal before acting on it. Now, once you spot a divergence, don't rush in just yet. Okay, look for other confirmation signals such as support and resistance level. Like I said, it's important to set your support and resistance levels, okay, because it can help you to get extra confirmation. All right, this extra step can help you avoid false signals and improve your entry timing. Okay, now finally, based on your analysis, set your entry point, set your stop loss. For this case, you set stop loss above the resistance. If it was a buy trade, you set your stop loss below the support. All right, you set your take profit levels for a sell at the nearest support, for a buy at the nearest resistance. Okay, planning these in advance can help you discipline and can help keep you disciplined and prepared. So no matter what the market throws at you, you'll be ready to take it. Okay. So now that is a complete overview of the Forex divergence strategy. Whether you are a beginner or an experienced trader, understanding how to spot divergence can really enhance your trading decisions. Remember to watch for divergence between price and indicators like the RSI and MACD. It could signal a trend reversal or continuation, giving you the edge you need. Okay, so if you found this video helpful, don't forget to hit that like button and please subscribe for more Forex trading insights and strategies. Drop a comment below if you have questions or if there's a topic you want me to cover next. Thanks for watching and happy trading.